But now she's looking into a VA renovation loan, or excuse me, FHA 203K. I'm thinking about two different clients.
You listened to yesterday's show, huh?
I know. FHA 203, FHA 203K, and both of those retails don't offer that. And so there is a difference. And I said, hey, I just want to let you know, first off, both of those companies are great, but we're already approved with them. And you'll get wholesale pricing versus retail pricing. So right off the bat, you just come to us and we'll take care of you. I have Rocket, I got Union, and those are great companies. And it's just one of those things. But, come to me and you'll have the wholesale pricing. And then once again, when you go retail, you're limited on what you have to offer. So when you want to buy a house that needs a little fixer upper, I need about $50,000, $70,000 to fix this up to where I want it. They don't have that option for you. Exactly. So now she's going to have to get pre-approved again for the third time. And so that's where we are. So, I see, like I said, when we started off, 60% of business was being done by mortgage brokers, prior to 2008's implosion. And then it dropped all the way down to 5%. And it was looking meek. And then we've made this surgence,
I think we're as of late. 35% today.
19% per Matt Ishbia.
I thought Matt's number was a little bit higher. I mean, I went to the UWM live. I thought we were closer to 30.
I thought he said 19, and then he wants to get there. I thought he wanted to get it.
Unless that was the projection he was going by.
Yeah, he
wants the growth that's going on.
Yeah, he wants 1 out of 3 loans to be done by an independent mortgage broker.
Yeah, they also signed some new thing. I don't know if you saw that built. They're giving people like credit card points for making their mortgage payments on time.
Oh, wow.
Yeah.
That's a good benefit.
Another venture partnership that he's got his hands in. I mean, he does a great job with a lot of different things, but
I always felt like we should receive residual income.
Absolutely, right? I mean, if the loan performs, we should get residual income.
100%.
Right? Just how kind of life insurance works and everything else, right? But we don't, right? And that's part of the thing, right? That's why we got to stay in front of our customers and give knowledge, and that's the difference between us and them.
Correct. I think technology has, even though I complain about technology because an hour of my life just went away, but I do feel like technology has helped the broker side. We're not as antiquated compared to our brethrens, right? We can offer the same type of DocuSign capabilities, e-signing disclosures. So we do have a lot of those capabilities that I think has kind of closed the gap on the experience level that you would receive from maybe a bank versus a broker. What do you guys think about that?
Yeah. Mitchell, you want to go first? I want to touch on the technology.
She might be frozen right now.
All right, I'll go then. So to me, the technology is great. Everything's going to continue to evolve in technology. But the old-fashioned taking the application and having that conversation with your client, I feel still needs to be a must. And it's not just, here's my link, go fill out your application. You need to have these conversations with your clients. It's how you learn about them. Hey, do you have kids? What are you doing? What are your plans? Not just, what's your name? What's your social security number? What's your address? How much you looking to buy? I'll call you back, right? Because then you pull credit.